we look at them at Bitcoin from a similar place. I feel like, well, we're not Bitcoin maxis, but we're willing to definitely give it a good chance. So I just wanted to follow up with you now. Since we last spoke, we've had developments in the Bitcoin ecosystem. Have they made you, number one, warmer or hotter on Bitcoin as a store of value, digital gold? Number two, Bitcoin as a currency, a medium of exchange. Would love to get your take here.
Yeah, I mean, I think the biggest thing I'd say from the perspective of an investor is the issuance or creation of these spot Bitcoin ETFs really does change the picture in terms of the protections that individual investors have in order to invest in the product. The ETFs, particularly those issued by big name institutions, either explicitly or implicitly have guarantees that if various issues come up related to the custody of those assets, that odds are those companies are going to back those products and ensure that customers are made whole. And that's a pretty big deal, considering one of the biggest issues in this space over the last decade has been a question of whether or not people were actually, having had the exposures that they were expecting when using other intermediaries. So pretty much changes the picture there.
Yeah, it gets rid of a lot of the friction and sticking points that an investor would have, especially like wealth managers, to put a client into digital assets.
That's exactly right. And so I think what it does is it opens up the opportunity to say, for the folks who are curious about Bitcoin, want to start to leg in a little bit, the essentially the cost of doing so in terms of just buying an ETF in your brokerage account, it's just a lot lower than going and setting up an account at a third party, and it's not related to your existing assets. And how exactly do you hold it? Now, of course, there were other options out there like the Grayscale Bitcoin Trust, but without necessarily the protections that exist in the ETF structure, with big, trading well above or below the fair market value of the asset, and so this, and actually at considerably higher costs. Now we're talking about investing in Bitcoin at 25 basis points of fees. So totally changed the picture there. And I think what we're seeing some incremental interest directly as a result of that. I think the real question is it good enough to be a primary cornerstone of people's asset portfolio? And the volatility so far, it's not quite there yet. And so that's what we're seeing,
Bob, I'm going to dig into that. I want to start first on the transaction costs since the halving and ask you what that may mean for Bitcoin's chances of becoming an actual functional currency. So we've seen that transaction costs have gone up. It looks like they're kind of unrealistic for any smaller transactions. I mean, you're not buying a coffee, the fees are too high. Have what you've seen post-halving, transaction costs, just friction costs, does it make it less likely or more likely that Bitcoin could ever be like a currency with transactions built in?
Well, I think, there's a lot of other experts in the world of Bitcoin that are probably more knowledgeable than me. I think the main question,
I like your angle. I like where you come, because you're not a maxi. You're looking at it as an asset allocator, and so it's a very
yeah. I think the basic question is, in order to be a currency, the transaction cost of a currency has to be very low, right? Obviously, like the transaction cost, if you have a $100 bill in your pocket, is zero, right? Because you just hand it to somebody, and I think when you start, you just hand it to them. That's that easy, right? Or swiping a credit card, the transaction costs there are a few percent. I think the challenge with it being a transacting currency is exactly what we see here, which is the pace in which the transactions occur and the fees that it takes. Now, I'm sure there's going to be a lot of folks working hard to figure out ways to reduce these for smaller scale transactions. But until we get an environment where people can reliably believe that the transaction costs of can be very low, like 1%, and the transactions can be immediate, it's going to be very challenging for it to serve as a transactional currency. Now, I'd separate that from being an intermediary to transition wealth. That is something, particularly in an environment, where you're talking about larger amounts, right? You're not talking about buying a slice of pizza. You're talking about preserve your savings, say in an economy where there's questionable ability to save in banks, and things like that, that's where you might be willing to pay a more meaningful transaction cost to move a larger amount. And you might also be not so sensitive about transacting instantaneously, but transacting over time. And so you put those things together, and I actually think that part of it still remains, even if the small scale transactions are no longer have yet to be proven out sufficiently to make sense to do.